Hey, welcome to OZFX, and today we're going to talk about how and why markets move. We're not going to spend too much time on this because overall it's not that hard of a subject, and there's only a few points that we really got to cover. And as you can see, I have written over here that you have uptrend, you got downtrends, and you got a sideways consolidation. The market can only move one of three ways. If I were to draw it out here, you got your uptrend making higher highs and higher lows. You got your downtrend making lower lows and lower highs, as you can see there, and then you got your sideways consolidation. It doesn't always have to look that clean. You can have uptrends that look like this and vice versa with downtrends. But when you're in an uptrend, you are bullish. When you're in a downtrend, you are bearish. And what's the basic reason that markets move? Supply and demand. If I was going to write something else up here, I would write supply equals sell, demand equals buy. Okay? Typically, or almost all the time, demand zones will be at the bottom, supply zones will be at the top, sell at the top, buy at the bottom. It's just really basic stuff. I just drew this little crappy little drawing up here of what I guess you could call some market structure here. And if I wanted to show you an example of supply would be up here at the top, demand would be down here at the bottom. Those are two crappy little examples. But hopping over here to the charts, I want to get into some basic market structure really quick. And the first thing I want to say is to look to the left, right? You always want to zoom out and look left and see what story the market is telling you, because when it comes down to it, the market is always telling you a story. Now I'm on the daily chart here, so there's a lot of information being shown to me right here, but if I was to zoom into this area right here, it is very easy to see that we are in a downtrend here. And I'm going to skip through a lot of this, but lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and so on. That's how easy it is to identify a trend. Now, one of the next things I want to cover really quick in basic market structure, I was almost going to say supply and demand again. I'm about to say support and resistance. I myself do not use support and resistance, but almost every retail trader does. And just looking at this chart, I can already see support and resistance like right here. That is an area of support, and support is just an area that price has come down to and touched and bounced off of multiple times. As you can see, you got multiple touches here. You got 1, 2, 3, 4, 5, and then this blew through that. And as you can see before that, the line right here, and this happens all the time. Support, previous resistance often can equal new support, and vice versa. All right, so before this became support, it was resistance before that, and resistance is just price leading up to a level and bouncing off of multiple times. As you can see, it bounced off here, it even played around with it over here. Now, as you can see, I drew one line and we got multiple touches on it, and you may be asking why I personally don't use that. That's not what this video is about. But I could literally sit here and I could mark up a bunch of support and resistance lines. It's this one. This one right there is another resistance line. I guess you could use this one right here if you really wanted to. I'm sure a retail trader would draw that. Yeah, because over here you see there's more support. I mean, resistance. Yeah, that's all. I don't need to sit here and draw a bunch of support and resistance. I think you guys get the picture. Support and resistance isn't what we're covering on this channel anyways. But it is something that you need to know just for your research, because support and resistance is a thing, and you can often see price bounce off of those areas. I just personally do not trade them. All right, I showed you a little bit of the market. I told you what ways the market can move. Now, who moves the market? I'm going to move back over here, and I'm going to type this out for you. So we got central and reserve banks, foreign exchange brokers, commercial banks or market makers, and corporations and entrepreneurs. When it comes down to it, there is a ton, or probably millions and billions of people that actually fill up the market. But when it comes down to it, I have my own personal belief that smart money moves the market and the banks manipulate the market. That is stuff that we will go into a later video, and that is more about the way that I trade. But yeah, other than banks manipulating the market, it's also just everyday people like me and you that move the market. We are participants of the market. We don't move the market with just one of our trades specifically, but as a collective, Forex traders in general move the market. What else can cause the Forex market to move? Interest rates, unemployment data, economic growth such as GDP, and the central bank meetings. Feel free to write all that down. And when you are considering the market movement, consider the economic calendar, consider the banks manipulating the market. And the one thing that I like to tell anybody that asks me about Forex and trading and just anything in general, when they ask me about my strategy, when they ask me about my win rate, when they ask me about anything Forex related, I tell them that anything can happen. Any move can happen in the market. No matter what. It don't matter how good your analysis is. It doesn't matter what trend you think you're in. It doesn't matter what. At the end of the day, and this is a quote from Mark Douglas, the author of Trading in the Zone. At the end of the day, the market moves due to a difference in conviction between buyers and sellers. That means there's either more buyers than sellers, or there's more sellers than buyers. At the end of the day, after you put that trade in, the trade could do whatever the market wants to do. But yeah, guys, I got into a little bit more than I even wanted to there. I got into even market structure and support and resistance there, but I'm gonna stop it there. When it comes down to it, just remember, the market's moving an uptrend, a downtrend, they move in a sideways consolidation. Up is bullish, down is bearish, and supply and demand is the basic reason that markets move. That's all I got for today, guys. Until the next one, I will see you next time. Yeah, that was terrible. Peace. That was even worse.